Get the lowdown from Vivek, who's standing by. Vivek, take it away.
Well, absolutely right. When you're talking about ABB India, it was a very strong quarter for the company. We did highlight the fact that the order inflow, we typically had a quarterly run rate in the range of 3,300 to 3,400 crore. This time around, it had cooled off to close to 2,700 crore. That was something that the management explained, saying that, it was on account of a very high base. And the base quarter actually had a one-off large order as well. So even that is something that post all of the adjustments, the order inflow growth actually went up marginally by close to 4%. That is something that the street saw as a bit of a blip. But what's actually transpired in the conference call is the fact that the company has actually alluded to some moderation as far as the high EBITDA margins that they enjoy, and also some moderation in terms of the growth rate that the company had been enjoying, especially in the last 4 to 5 years. So moderation in order inflow, moderation in growth rates. Along with that, even when you're talking about the current order backlog, remember ABB India actually typically has short cycle orders in its order book. So the company has said that 65 to 70% of the existing backlog will be executed over this year itself, and the balance 30 to 35% will be executed over the next year. Now, along with that, what they have said is that the lower growth as far as the order inflow is concerned, they have gone ahead and accepted that, but they have said that this is largely transient in nature. It's not a structural slowdown as far as order inflow growth is concerned. They've also highlighted that there could be some moderation as far as growth is concerned before the next cycle of an uptick actually starts. So they're saying correction in the demand could probably span out over the next couple of years. As far as government capex is concerned, they're not directly exposed, but they said that they do supply to players who are directly exposed. So 30 to 45% is the kind of exposure that they have over there. Moderation in commentary, moderation in growth rates, moderation in EBITDA margin, something that they've alluded to, and this is something that has led to a bit of a sell-off from the highs that we saw today.
No, not just from today, from the top as well, I guess. I was just looking at it, Vivek, about 40 to 42% down from the peak ABB. Sorry, throwing an out-of-syllabus question to you just like that. But from the highs of almost 100 times forward PE, now I guess valuations would have come down to what, 60, 70 times for ABB?
Absolutely right. And, when you're talking about ABB India, also have to keep into context a whole host of other, capital goods companies as well. So not just ABB, look at Siemens, look at Cummins, look at L&T. All of these companies have actually seen multiples moderate quite significantly. A little bit of a concern in terms of domestic capex, not revving up as expected, and that is something that a lot of them have alluded to. Even when it comes to Siemens, they also said that one particular segment, process automation, etc., is not growing as they expected, and ABB too is actually one of the companies that's been impacted by that. But overall, especially in the last 4 to 5 years, management, was at pains to explain that they were very high growth years, so they are now on a higher base, and growth to go ahead and actually continue at that pace could be a little tough.
Okay, all right, got it. Thanks very much for that, Vivek. Thanks for the perspective there.